on this channel. Now in this video I'm going to be going over some of the new stocks that I have recently just added into my dividend portfolio. But before we get into it, if you could please hit the like button, drop a subscription to the channel if you haven't yet. We're doing multiple videos per week on my stock journey, including my ISA, which I can show you right now, which I'm dollar cost averaging £180 every single day into this account. You can see we're currently sat at almost £40,000 in here. I want to get these free funds down so that that's all invested, ready for the new year in April 5th, ready to start obviously the new financial year. However, today we're going to be focusing on the dividend portfolio. I have two portfolios in stocks, one of them being my dividend and general investing account, my growth stocks and dividends, and then also I have my ISA account. Now I also have a SIP, a self-invested pension, which you can check out. I made a video on that yesterday as well. But with that being said, let's jump into the video here. So I have added 3 new stocks to the portfolio, but before we get into that, let's go ahead and see how the overall portfolio is doing. So Altria is up 5%, AT&T up 5%, BC is down 7%, BHP were pretty much at break even, BP were up 11%, British American Tobacco break even, Coke we're down 3.22%, Imperial Brands were up 11%, Intel were down 11%, Realty Income were down 1%, Rio were down 1%, and Unilever were down about 4%. However, if we look over the last week, you can see the stock market has been coming back up. I mean, AT&T has done a 16% this week, which is very nice. BC up. Everything is pretty much up or a break even over the last week. So we've had, Coke's up over 6%, which is pretty cool. Imperial Brands 3%, Intel 4%, Realty Income 5%, Rio's break even, and Unilever's break even. So I mean, but if we look at the 3-month outlook, things are starting to get back up. I mean, BP's done 22% over the last 3 months. Of course, the petrol prices and everything, of course, the crisis with everything going on in Ukraine and Russia right now has caused that. But yeah, I mean, over the last 3 months, some stocks are starting to recover nicely. However, if we look over on the 1-year term, AT&T down over 30%. So I mean, we're looking at some great buying opportunities here, in my opinion, in the stock market. So that is what I'm doing. I'm consistently adding to this. Now I'm about to do, today I'm going to do a £10,000 deposit into this account and start dollar cost averaging again into these stocks. These are my long-term dividend picks for now, as I will continue to add more, and I have added 3 new ones, which I'm going to show you in a second, into my dividend pie. But yeah, stock market is looking nice. I mean, there's some pretty good opportunities here to go ahead and start making some money. My portfolio has recovered quite a bit over the last few days. We were down about £40, and then we made about 50 or 60 back, just because I've done some trades and added some money into some different stocks, which have done quite well. So we've done pretty nicely over the last couple of days, actually, with making some smaller trades with this. I know I've only got £2,500 in this account, which I know for some people is a lot of money. For some people it's not a lot of money. To me, it's not a lot of money, so I want to increase this dramatically. So that is what I'm going to be doing. I have about 60k ready to dump in and play with the markets as we go along. So the 3 stocks that I have added into my portfolio. Now the first one is going to be BCE, which it's logged me up for some reason. Let's go and search it here. BCE here, which is down over the last year about 13%. 3 months we're down only 10%. A month we're up. 1 week we're up, and then today we are up, or yesterday, sorry. And you can see that again we're at sort of a good buying opportunity. I mean, that's what a nice increase from the all-time high there. So they do pay a dividend yield of 6.2%. Now I'm focused on dividend because I'm focusing on passive income here for my investments. So BCE is a Canada-based communications company that provides Bell broadband, wireless internet, TV, media, and business communication services. So yeah, there you go. That is what BCE is. Now the next stock is Broadcom. So let's go ahead and take a look at Broadcom here. Let's see. Now, again, a lot of these companies are mainly, high dividend paying companies, although this one here only pays a 3.65% dividend yield. And as you can see, the stock is up pretty nicely over the last year. We are down 13% though. And 3 months, again, we are down. Again, a nice looking buying opportunity here for Broadcom. So Broadcom is a technology company. The company designs, develops, and supplies a range of semiconductor and infrastructure software solutions. The company operates through 2 segments: semiconductor solutions and infrastructure software. So there you go. That is what Broadcom is specialized in, with a dividend yield of 3.65% there. Okay. And the last stock is going to be BHP, which I have started buying, and I think I did go ahead and make a video on this or include it in one of my videos the other day. So this pays a 8.9% dividend yield. I already have about £300 in here. We own about 15 shares so far. So BHP, formerly known as BHP Group, is a global resources company. It focuses on extracting, processing minerals, oil, and gas primarily in Australia and America. Its segments include petroleum, which is engaged in the exploration, development, and production of oil and gas; copper, which is engaged in mining copper, silver. So essentially, they're a mining company of oil and gas, copper, zinc, lead, and a bunch of other stuff. So that is why, again, they are pretty much at a break even over the last year or so, or actually they're up over the last year because of all the oil and gas crisis going on in the West right now, specifically in the UK, and they're a UK-based company, so this is good for oil companies. So yeah, those are the three stocks. Now, if we go ahead and take a look at my overall pie for the dividends, if we go over to pies and we go to holdings, you can see that I have now added Broadcom. I have added Rio Tinto as well, which I'm going to start dollar cost averaging. I do own some Rio. If we go to manual investments, you can see here we own about £500 worth of that stock. However, I haven't bought it in the pie yet. That's why the pie only is about 1,100 invested when I've actually got 2.5k invested there. And BHP, so Broadcom, Rio, and BHP, and this is how my new weighted portfolio looks like. So we've got Realty Income is at 15%. Realty Income is my long-term retirement plans with that 5% dividend yield. 5.16% dividend yield, paying on a monthly basis. They are a REIT, and I've made a video on this, but I much prefer holding a REIT than owning real estate, because I do plan on buying some real estate over the next few years. However, my mindset's shifted over to REITs, and specifically Realty Income. I like their portfolio. I like the commercial use that they have in terms of the properties that they own. And, it's much better, much easier, much more convenient to go ahead and buy a REIT. I can sit and play Call of Duty all day whilst earning cash on my stock. I earn cash in terms of property going up, in terms of rentals going up, in terms of just the overall market. And then also the dividends, which pay out once a month, that 5% a year. Every 100k invested is £500 a month in dividends, which is nice to see. So, and then also you gain on the capital appreciation. So it's a bit different in terms of owning an actual property, because if I put 100k into a property, I could probably get maybe like 1,500 to $2,000 a month in rent. But then I'm stuck in terms of paying property management, paying contractors, paying for repairs, all of that, headache and BS that comes with owning a property, right? Dealing with tenants, property management, contracts. If I want to sell the property, I have to do viewings, and it's just a nightmare to deal with, in my opinion, and I don't want that stress. I've dealt with illiquid assets before, and I don't like that stress. So, yes, Realty Income is my long-term retirement plan, owning real estate, so that is why that is heavily weighted at 15% of this total earnings. We've got BHP at 12%, Rio at 12%, Broadcom at 12%. Unilever at 10, Altria at 10, BCE at 10, BP at 5, AT&T at 5, British American Tobacco at 3, Coke at 2, Imperial Brands at 9, and Intel at 2. Imperial Brands is 2 as well. So I just reweighted these this morning, and the overall return should be about 9.85%. Plus, if we have an average of, let's say, 4% dividend yield, that's about 14% return there. Cash on cash returns on average, which is nice to see. So there you go. I have made quite a few manual investments over the last few days in BHP, Realty, and Rio. So yeah, you can see BHP's down, Rio's down, and the stock market for the US isn't yet open because it's midday here. So yeah, we'll see what Realty Income does today. I'm expecting probably a pullback if we're looking at the overall market. I mean, if we take a look at the S&P, let's see what the S&P is doing today, see if that's down so far. And if it is, then we can kind of get an indication of where we're going. Yeah, so the S&P is down almost 1% today, so I do expect the Realty Income to drop when the market does open. So quick look at the ISA then. You can see we did do my dollar cost average today at around, that was yesterday. This morning here, as you can see, about 9 a.m. I did go ahead and do my dollar cost average of £180 there into the portfolio. So there you go, guys. Those are my new 3 dividend picks for my retirement that I'm looking to build and looking to make a big payment into. Let me know what you think. Subscribe if you're new. Let me know what stocks you're buying up. Those are my picks. Now, there are some companies that I've seen, and shout out to my friend Escape the Matrix. He's got a good dividend stock channel as well. He did go over some more sort of lucrative and interesting stocks that pay up to 100% dividend yield, which is, they're all sort of Greek shipping companies that look kind of interesting, and I've done some research in that I'm looking to research more. Some of them have like a 50%, 60%, some of them a bit more conservative at 20%, and that's quite funny saying 20% is a conservative dividend yield. But for those stocks that he went over, that was one of the lowest I've seen from what he covered in that video. So yeah, I'm going to do some more research on that. Maybe I'll take a punt on one of those for the upcoming bull market, and we'll see what we can do for that. But yeah, thank you guys for watching. I hope you enjoyed. Subscribe if you're new, and I'll see you in the next one. Peace.